So I lean more towards B2B tech. And I lean that way because I feel that because the market is small, you need to be looking at business opportunities that have an easier pathway to scaling internationally. And when you think about the commonality of needs of business services, what your accounting department of your business needs is pretty similar, whether you're operating in the US, Malaysia, Philippines, Central Africa, wherever. You're still doing chart of accounts, debits and credits. You're still doing a lot of basically the same. So the needs case is much more common. Whereas when you start thinking about consumer preferences can have wide variety.
Welcome to the iSearch podcast. Today we have Kevin Brockland on the show. So Kevin is the managing partner of Indelible Ventures, a seed stage venture capital in Malaysia. Today I'll be discussing with Kevin on the potential of startups and entrepreneurs in Malaysia and also how to scale globally. So welcome to the podcast, Kevin.
Thank you very much for having me here.
All right, so let's begin. So I think we'll start off with something very interesting. So what made you leave your career in the United States and come to Malaysia as a VC? What is the potential here and why Malaysia?
So my pathway to come to Malaysia was a little bit more of a squiggly line, let's call it. I had started my career in distressed assets, dispositions, turnarounds, all of that kind of stuff, advisory work for secured lenders, working with a firm called Tiger out of New York. And so I switched to do something a little bit more international. So I got on board with an investment fund out of DC. We had about, I think at that point we had 300 mil under management. I think by the time I left it was more like 450. And so with them, I was overseeing 17 funds across 19 countries, really with a global footprint where I was the global portfolio manager overseeing all of those. We had local teams on the ground, and I managed the two global funds that we had there. From a career standpoint, fantastic. You're moving up, you're getting the increase of responsibility. But it's at one point I started losing the fun, and the fun is being able to interact directly with companies. And so I hadn't decided to launch my own entity as of yet. Instead, I moved to another global investment fund and took a regional role. That region was actually Latin America. And so I moved to Mexico, was living there. It's the second time that I had lived there in my life. I had previously managed the region as well, so I was quite familiar with it. But shortly after joining that role, the person that was covering the Asia portfolio goes on maternity leave. So the nice guy that I am, because of the familiarity that I had, I volunteer. Don't worry, I'll watch over it while this person's away. Never came back to take the portfolio. So essentially, for a year straight, I was doing 2 weeks here, 2 weeks there. And each of those 2 weeks, I'm basically country hopping. So it became quite exhausting. Physically, etc. It was interesting, don't get me wrong, but it became quite exhausting having to do so much bouncing around. And at that point I said, okay, well, I'm only going to stick with one side of the planet, because essentially I'm on 24 hours, because time zones, the moment Asia goes to sleep, Latin America is waking up. So I'm basically working 24 hours alongside that. And so I choose Asia. For that company, Asia for them was South and Southeast Asia, solely the emerging markets. So we did not invest in like a Singapore or East Asia or any of that. And so I could basically select. I had to relocate into the region, but I could basically take my pick of where I wanted it to be. And the choice in Malaysia was very pragmatic, let's say, because of the connectivity of the airport, the cost of living, and the infrastructure that's required in order to work. It kind of fit all of those categories. And for my wife, who had never worked or lived in Asia before, it was a very easy entry point. And so then over the time that I was living in Malaysia, most of my time at that fund was not focused on Malaysia. It was, as you'd imagine, it was focused on the more high volume markets. So I spent a lot of time in India and Indonesia. Also going to Philippines, Thailand, Vietnam, and basically everywhere else as well. But the preponderance of the time was those two markets. I was in Indonesia 1 or 2 times a month. I was in India basically once a month. And so I was constantly around. Actually, my Indonesian actually got pretty good. I could speak it pretty decently at one point. No longer, but at one point. Yep. But back to Malaysia. I got involved into the startup ecosystem, being a business coach, a mentor, and whatever other ways that I could volunteer my time in order to get involved into the startup ecosystem. And so what I saw over that time was that we actually have really good founders that are coming out of Malaysia. We don't produce a sufficient enough volume, but that's a different problem. But we do have quality that comes up. But the challenge that ends up happening is that the funding ecosystem is completely broken. It's a disaster. And so a lot of these companies, they lose momentum, they die, or they move. And it's not late stage, which oftentimes I hear from people saying that it's the late stage gap, and there's been initiatives towards trying to plug in the late stage. Late stage capital is global. It's not country specific. The larger the amount of money that you're talking about, the more global that money is. By the characteristics of that amount, it has global options. But when you're talking about the earliest of stages, talking about, say, seed stage, that's an amount of money that's relatively small in the grand scheme of things. And oftentimes, small amounts of money don't cross borders unless there's personal or other sort of connections that's able to pull it. And so that's the area that I saw created this problem, this funding gap in the ecosystem. And so after a while of kind of seeing it and all of that, it was constantly in my head. And next thing you know, I decide, well, why not me doing something about it, put my money where my mouth is, pull up some capital, and start taking advantage of this, what's a current asymmetry, but is not going to last forever.
Right. So how long have you been in Malaysia, and so like how many years have you started your own venture firm?
Yeah, so I've been in Malaysia now for about 7 years, so a pretty decent length of time. And Indelible has been around for a year and a half, something like that. So relatively new kid on the block. Not that there's very many kids on this block in regards to VCs. I think you really only need a single hand and not all your fingers either.
Yeah, there's really like what you mentioned. There's very little like seed stage venture capital in Malaysia. So yeah, having met and invested in Malaysian founders, what do you think is like the key strength and also the weakness of Malaysian founders compared to the ones in the States?
Yeah, I mean, if I'm comparing it to the States, I think the founders in the US have this inherent boldness and discontent. And I don't mean discontent in a bad way. I mean like there's constantly like, why isn't this way? Why isn't this way? So they go and do something about it. So there's this constant like, if I see something wrong, I'm going to do something about it. And so you see a lot of founders that are just kind of like inherent hustle. And I think that we have that, but the system is not set up the same way in order to reward that kind of personality. The other thing that I would say on the local ecosystem is you have some highly ambitious that say, I'm going to take over the world with my business idea. But you have a lot of folks that are just thinking about conquering Malaysia. And in all honesty, you're not going to get a VC excited if you're just talking about Malaysia because the population size is too small. If you were in a high population market like in India, China, Indonesia, you don't need other markets. If you're in the US, you don't really need other markets because it's huge. But Malaysia is quite small. And so by necessity, it needs to reflect a little bit more of the Singaporean ambition, where you never meet a Singaporean founder that says, I'm going to just conquer Singapore and that's it. It's by nature, a small population market, which is basically city-state. You have to go somewhere else. And so I think we need to encourage that more from an early age, as going through secondary and tertiary education. More of the startup programs need to kind of necessitate that you need to be looking beyond the borders. And I can understand, like, if you're deploying public funds towards something, public funds kind of need to be ring fenced towards the public that it's coming from. So it becomes very nationally focused. But in order for these companies to get to where they need to be, in order to be able to follow a VC pathway, they need to expand their addressable market. And the only way that they're going to end up doing that is by looking abroad.
Okay. I think one thing that you mentioned at the start is when you mentioned, like, in the US, whenever founders see something that is not right, they wish to immediately try to fix that problem, right? But I guess in Malaysia, the problem, I don't know whether is it an Asian mentality. When we see a problem and we want to, say, fix it, then we'll think, if I were to jump into that thing, I need to leave my comfort zone, my comfortable job, monthly salary, and do something where I don't even know whether I'll succeed or not. So what are your thoughts on that?
Yeah, I think, there's a couple of things on that. It would be unavoidable to say that there are safety nets that exist in the US that are a little bit different than here in regards to the availability of opportunities and the normalization of failure. Because if you go out and you fail in a startup in the States, you go to an interview and you tell somebody, yeah, I started a business, but it didn't work out. They'll not look at that negatively, like you're toxic. But if you're here, you fail in a startup, and then you're like, well, I guess I need to go get a corporate job. They're going to look at you as a little bit toxic. And that's unfortunate, because the amount of learning that you could have potentially taken away from that failure, by and large, is likely to beat your nearest competitor for that position, because you learn more from a loss than a win. Now, not all failure is equal. There's failures that are just, negligence or scams or whatever. But sometimes failure is unavoidable, just because, like, the nature of the market, the timing, the same way that luck plays a role into being successful, there's the converse of that. And so I think we need to normalize a little bit, not blanket acceptance, but normalize the aspect that you can learn from failing, and that it doesn't create a toxicity. If we can get to the point, that will reduce the risk base of somebody saying, I'll leave my job, I'll try this, because the job market here, there's somebody will still take me back.
Fair enough. So speaking of potential, what are some opportunities currently in Malaysia that an aspiring entrepreneur should look into?
So I lean more towards B2B tech. And I lean that way because I feel that because the market is small, you need to be looking at business opportunities that have an easier pathway to scaling internationally. And when you think about the commonality of needs of business services, what your accounting department of your business needs is pretty similar, whether you're operating in the US, Malaysia, Philippines, Central Africa, wherever. You're still doing chart of accounts, debits and credits. You're still doing a lot of basically the same. So the needs case is much more common. Whereas when you start thinking about consumer preferences can have wide variety. If you take the example of Malaysia and you take a person from JB, compare it to a person from Penang versus Kuching versus Klang, you're going to end up having four pretty distinct sort of personalities, depending on if they've all moved to KL and they've already kind of assimilated into being relatively similar. But if you extrapolate that into countries, and you start thinking, the Indonesian, the person from Jakarta, is quite different than the person that's from Medan, is quite different than Makassar, or if you start going into Manila, it starts becoming much more of a variation. There's people that have a really good handle on it, so there's opportunity. For me, not my sweet spot, let's say. I understand business needs much better than I understand consumers. So I think that more startups need to be looking at how can I solve these problems to do one of two things, and ideally both. How can I increase a company's revenue, or how can I decrease their costs? And ideally, can I do both of them at the same time? And most of that comes around efficiencies and productivity, those sort of things. But there's a lot of room to explore.
Yep. And also usually like B2B tech business, like the profit margin is also higher, so you can reinvest a lot to like scale globally.
Yeah, exactly. And you also have the benefit of subscriptions, where oftentimes a customer will pay you 1 year in advance, as opposed to some consumer products where you sold a physical good, now you got to send a bill, wait 2 or 3 months in order to get paid for it. I mean, there are some business services that operate that way as well, a lot of consultants and the like, agencies, etc. But with a product like SaaS, you're selling subscriptions. So you're either getting paid monthly, which is predictable, which makes it easier to manage your cash flow and your growth trajectory, assuming you can have some level of predictability around churn and some of the other metrics. But you also have the benefit of potentially getting paid in advance. If you get paid in advance, that's a great way in order to invest in growth. Because now you can take all of those next 12 months of revenue and push it towards acquiring more customers. So I think there's a number of benefits from the model.
Okay. I think in Malaysia, we are probably not as tech savvy as, say, the States. I think this is a very common problem where people have the idea of, say, a SaaS business, but then the question is they don't know how to code, or they don't know how to like develop the applications. So what are your advice on how can they find like good developers to help turn their idea into a reality?
Yeah, I mean, in all honesty, there's a shortage of developers in the US as well. And the cost of some of these developers is crazy, especially if you're in the Bay Area, where salaries can be quite high. But I think Malaysians are pretty digitally savvy. I think the generation that is launching businesses now, you are either native growing up with technology in your household, or you adopted it at a relatively young age. Because most of the entrepreneurs that we're seeing are in that kind of like 20 to 30s range. Every once in a while, there's an outlier that's a bit closer to my age. But that's not as common. But most of them are pretty digitally savvy. I think that there's nowadays a lot more low-code, no-code sort of tools to where you can put together an MVP to be able to go out and validate your idea. Relatively low cost, relatively low touch, to be able to get something out there and see whether or not this is worth putting further time and expense into. But there is an inevitable aspect that developers are short in most markets across the globe, not necessarily just Malaysia, but most markets always struggle with, we just don't have enough technical talent. You have some markets like India, which are net exporters of technical talent. Ukraine was prior to what's been going on there. But you have markets. Vietnam used to be like a big hub for dev shops. A lot of outsourcing became very expensive now. So it's kind of become a little bit more difficult. But it's a perpetual problem. And so there's not really an easy sort of solution other than you need to be able to sell your idea when you're trying to bring people on board. And so you need to sell those employees why they should come with you, as opposed to this other startup or this other MNC or corporate or whatever.
Okay, assuming you get a developer to come on board, what is like the typical percentage of equity that you will give to the developer to continue to stay on and develop this SaaS?
Yeah, in Malaysia, most times they're not even giving them anything. The equity allocation to employees is still pretty uncommon in this part of the world. It is starting to become more common, but there's not yet any sort of like fixed rule of thumb associated with those allocations. Further, you can't even always get, or at least I haven't always been able to get, the same advice from multiple lawyers in regards to setting up employee stock option schemes. And so I think we need a little bit more black and whiteness out of that, or perhaps I'm just asking the wrong people. But I do think that incentivization around equity options for employees adds a little bit more skin in the game and alignment of the incentives for the team. It's not a fix-all for the churn that ends up happening. There's schemes that have happened in other markets like ghost shares and these other sort of creative mechanisms, but it's still relatively uncommon. But hopefully we'll start catching up with the way that it's done in US, Europe, and other markets.
Okay, right. Let's talk about scaling globally. So what is a mindset shift that an entrepreneur should have going from local to global?
Yeah, so I usually tell people, and this is normally a hotly debated topic in regards to when do you go, because the metrics unfortunately are not very clear, because essentially if you wait too long, I usually use the phrase, the neighbors are watching. And I say that because there's generally going to be some startup in a neighboring market that is copycatting whatever you're doing. And there may be a copycat in your own domestic market. I mean, it's the naturalist form of flattery, is that somebody sees that you're having success and they say, hey, me too, I'm going to do that too. Facebook wasn't the first social network, but they out-executed, right? And so if you wait too long, those other players that are only focused on that other market, they're going to start solidifying their branding, their go-to-market. They're going to start solidifying that positioning. And so if you wait too long, it can become more difficult to enter that other market. If you go too early, before you've established the product market fit, and before you've kind of established a go-to-market playbook, you can end up burning a lot of money and wasting a lot of money. So there's this kind of sweet spot in between those two, which is the ideal time period. Now, how do you know that you've gotten product market fit? Because there's not a one-size-fits-all definition for everyone. And so that's the trickiest part of being very metrics oriented, being very customer focused, and understanding what the behavior of your customer, the usage, the interaction, whatever it may be for your specific product, understanding that customer well enough to be able to say whether or not that product market fit has been established. And once you've established that, you can actually start pushing towards growth, and growth can be starting to look abroad. Now, you may end up finding that there's like a Pareto principle of an 80-20 to where you still have to adjust things. You're entering a new market. You may end up having to tweak your go-to-market strategy. You may have to supplement additional features because that market is concerned about a few other things that your current market is not. But the mindset change is really that ambition of, and that sort of strategic mindset of how am I going about this, and really being focused on those metrics and that consumer centricity to be able to be a guide on the when, the where, and the how.
Speaking of, let's say, where. So let's say they have already found product market fit in Malaysia. So where is the next country that they should scale to?
I mean, if you talk to most Malaysian founders that are here, they're going to say, I'm going to go to Indonesia next. It seems to be like 99% of the time, it seems. That's what a founder says.
Population.
Yeah, it's a big population, but That market is a very challenging market to enter into because there is a lot of competition and there's a lot of venture capital funding floating around. And so coming from Malaysia, where you may have like, say, $1 in the bank, that Indonesian competitor just got five. And so you're coming in a situation that, I mean, money isn't a game changer, but it definitely helps. So Indonesia is a very interesting market, and you can't help but with the size. But I think it also is useful to start looking at alternative markets. Some companies that I'm involved with, their products are naturally better suited to the US. And so we've got one company where their largest market is the US. 20 something percent of their revenue is coming from the US because it's a default global product. So really where you expand to next oftentimes depend upon what you're selling. But I do caution that Indonesia looks really attractive, but it's harder than most people give it credit for. And that unit economics are still a challenge.
Yeah. I mean, in Indonesia, of course, Malaysia to Indonesia is like maybe a couple of hours away. But to scale to US, how can they penetrate the US market without flying to there so often? Because it's going to be like, 20 hours flight?
Yeah, I mean, the US market is much more pliable with the self-serve sale, to where you can essentially use digital marketing and some other content marketing strategies to drive inbound traffic, and then you're basically optimizing for conversion for your website, ensuring that the messaging, the content, the flow, etc., is optimized. And the US is actually much easier for that style of sale. What a lot of times is now getting floated around is product-led growth. If you have a good product and you have a good kind of lead magnet to drive the awareness, the rest of it kind of starts falling into place. There's a lot more to it than that. But getting those leads into where they're building the awareness plus a incredible product can work very well for a market like that.
So, okay, we're coming towards the end of the podcast. So, for startups that's interested to get seed stage venture fund, what are some important criteria that you look for before you invest in a startup?
The first thing is that there needs to be a large enough market size. That I refer to that as kind of, that's your foot in the door. If the market size, if the opportunity isn't large enough, then it's just not going to be it's not going to give the attractiveness of being able to get sizable enough to make the return profile attractive. Because companies fail, and because companies fail, we need the success cases to be big successes. Inevitably, there's a high failure rate. Everybody knows that there's a high failure rate in startup land. And in order to compensate for that, we need big successes. And you can only have big successes with big market opportunities. And so the difficulty there is that it's not always the market opportunity of what you're doing today, but there needs to be a vision built around what it can be. And so that's the foot in the door. For me personally, I then go to the 3 Ps, as I say, which is people, process, and product. And it's in that order of importance as well. So the product comes last. Not that the product isn't important, but when you're in the seed stage, that product is going to evolve. What I'm looking for is indications of product market fit, customer validation, some initial revenue, ideally a decent amount of revenue traction, which helps the case on customer validation and being able to see some of the behavior and how they're interacting with your product or service. But I realize that product is going to evolve over time, and it's going to end up, there needs to be some sort of product roadmap. And that's when we start getting into the process side of it, where I'm not talking about rigid processes, because rigidity is not equated with startups. Startups need to be nimble. What I'm referring to when I talk about processes is more so in relation to feedback loops. And so when I talk about feedback loops, how quickly are you getting information back? And it could be, how quickly am I getting information back from customers that looked at my product but didn't buy? How quickly am I getting information back from customers that bought it, used it, dropped? How quickly am I getting feedback? The whole breadth of like usage behavior and all of that. You can get so much insight, but if you don't have short cycle feedback loops, you're going to end up wasting a lot of time. And so speed ends up coming from shortening those feedback loops and having the best and the latest available information so that you can then drive decisions. Now, the only way that you're going to be able to establish good processes and be able to interpret the information that's coming from that and react to it is great people. And so at the early stage, it really comes back to people. Are these the people that are going to succeed? And so advice for founders out there, certainly demonstrate market opportunity, the product market fit that you have, what's been going on with it, all of those sort of things. But you need to demonstrate that you are the person that is going to be able to win. Because building a startup is hard. The reason why most companies fail is because it is hard. And so a large part of the decision to invest in an early stage startup comes down to, are these the people? Is their founder market fit?
Okay. So how much revenue do they need to because it's going to be early stage, how much revenue roughly do they need to generate before they can start to say pitch you?
Yeah, I mean, most times we go post-revenue, but the majority of companies are below 250K in USD terms, so sub 1 million ringgit. We've seen companies approach us that are more at the 2 million side, but there's not really a fixed revenue number, because oftentimes what I see with companies in the earliest stages, they basically exhaust their close network to get a bunch of early revenue. And so you end up signing up like cousin so-and-so, uncle so-and-so. So you end up getting some of this revenue through some of these linkages. So the revenue itself is not as important as seeing some of the underlying behavior of those customers. Because if cousin so-and-so ended up subscribing to your SaaS solution for their company, but then never uses it, I mean, the moment they hit hard times, they're going to end up dropping it.
Okay. And do they need to get a co-founder, or can they go solo?
They can go solo, but it is not recommended. It's much harder to raise money. Most VCs don't want to invest in solo founders because, again, it's very, very hard. And so going alone is not viewed positively because it is very, very hard and you don't have the support of having a co-founder. That being said, there's also the view from many VCs that if you haven't worked and had a long relationship with your co-founder, that's also viewed as a negative. Because the same way, you're basically in a marriage with your co-founder, right? And the amount of stress and difficulty that you will go through, you'll disagree, you'll have different points of view, you'll argue, might even throw stuff. So there's a lot of failures that happen because of founder breakups. So again, I've invested in solo founders. I don't make a habit out of it because I do think that there needs to be co-founders.
All right. So before we end, is there anything else that you would like to add?
I mean, if anyone has an incredible idea and thinks that they have the opportunity to scale internationally with it, simply reach out to me. You can find me on LinkedIn. I'm pretty responsive. Or come to some of our events and flag me down.
All right. Thanks, Kevin, for coming onto the show. Check out Indelible Ventures down below, and I'll see you in the next episode.